What's up, everybody? It's Omar. It is March 28th, 6:32 p.m. in the evening, and I wanted to make a quick video about my go-to strategy. This is the strategy that I think, to me works best. Can make you a lot of money, and it gives you and I think it gives you an edge. This is the, if you watch, if you follow a lot of these guys like I follow, like Steven Dux has been, posting monster wins because he takes monster size doing this same strategy that I pretty much use. It's the same strategy for the most part. And I want to talk about this stock. I want to talk about my strategy. So basically, it's the day after. It's the day after the first red day. And what I mean by the first red day is, if you go, let me go to charts here. This is the four. This is GRN. This is the 4 time frames. This is the 1 minute, 5 minute, 15 minute, and daily. If you know this, first off, when a stock has a massive run like this, you're gonna get a massive wash. Okay, it's not gonna ever last forever. And this is the 50 simple day moving average. Look how far away it is from it. Like, the moving averages are like magnets, and eventually the stocks will gravitate towards them at some point. All right. Now, I posted, if you watched me yesterday, this was pre-market. Okay, this was like, I don't know, like 6 o'clock in the morning. I posted this, and I wrote GERN first red day. GERN finished red. Trick is to watch the open for the gap up and short into a key resistance level shows weakness. It can bleed slowly all day long. Look for key support levels or cover and buy dips. And then it was funny. I had some idiot, you can troll this moron if you want. He made some comment about me about I don't know how to read charts and blah 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 whatever. So, but when I was referencing the first red day, I was talking about the candle finished red. All right, that's what I was talking about. That the candle and that's what I mean when the daily candle is red. That to me is the first red day. That's how I look at it as. All right. Now let me see if I can do it here. I don't know. Maybe it's gonna be hard. It's not gonna work. Let's see. Okay. Let's see if I can do this here. Let me see if I can remove all this. I'll try to do it here. If not, I'll just go to the profit thing. Right? So this stock has been running. Now, what you want to do is you always want to see the chart history. Like you see like this stock hit a high 668 and it hadn't gotten back up to it. So you want to say, okay, is 668 a support level, or is it a resistance level that this stock has previously had? And what you do is, I always start with the 1 year, 1 day time frame, and this stock has not been $6 over the last year. So you go back, 2 years, 5 years. I'll go back, let's say 10 years, and 10 years is always a good time frame to check. And over the last 10 years, this stock has gotten as high as let's see, when was it here? It hit 779. Now the key is, what you notice here is like, oh shit, look, every time the stock gaps has a run, it always gives it back. So it has a gap up, gives it back, right? Back here, it had this big gap up, gave it right back. Gap up, gave it all back. Gap up, gave it all back, right? And then total collapse. Well, then if you see something like that, you know that this is gonna have to give it back at some point. And I've been saying that, right? And what did I say, right? So this day is what, the 26th, right? This day here is, where's the 26? All right, here's the 26, right? So the 26, this is where it hit its high, 649, right? And it kind of gaps down, and this is considered the first red day, right? So I'm telling everyone that look to short into a key resistance level the next day, right? Because it's its first red day. So in a while. So you got to think that it's starting to show some weakness. If you look at the volume, 24 million shares traded on this day. This day, 16 million shares traded. So the volume is decreasing. Okay, it's decreasing. So that's starting to show you that there's weakness. That's how I knew there was going to be weakness. Now let me see if I can do 5 day, 5 minute. Make it easier for you guys to see. These can't. Let me get rid of this. Okay. All right. So we're looking at. So this was the 28th. Here's the 20. I'm sorry. Here's the 20. This was the, I'm sorry, 26. Here's the 28th, right? So, and this is what happened today. This is what I was talking about yesterday. So I was saying short into key resistance levels. So it's kind of hard to do on this in this chart. This is kind of what I don't like sometimes about Thinkorswim. I'll go to profit because it's so clear on profit. So profit is the old Thinkorswim charting. What I like about it, it kind of condenses everything so you can see things really clear. And if you notice, right, I said 550, between 550 and 560 was a key level. Let me go back here, right? I said here, if you look at the chart here, right, look at where I had the key support level. I had it here, 549, 575, right? This was, to me, a clear support level, and it's because of this, right, or in this area here, all right? And, you know, and if you notice, right, my next thing, I said GRN, just like I said, you can short into overhead resistance. 550 level has a lot of overhead resistance, and the stock is showing weakness, so if it goes against you, you can cover. And I said, looking to reshort GRN at key resistance level, the higher the cover short squeeze, the better the short, especially if you can't hold 550. And then, you know, it couldn't, and you can see that it touched it, and then 560, and then came down. This is what I was posting. This was from Yahoo. I went on to Yahoo, and, you know, I'm always trying to look at a chart whenever I can, all right, if I don't have access at work. Now, if you notice, okay, this is the 28th, right? So this was the key, and all I did was simply, I just looked at the chart, and here you can see you have a lot of overhead. This is a big support level here, all right? This 549 level. So all I did was put a trend line, and then there was some more up here in this 560 level. That's how I got those levels. Well, look what happens here. Let's see if I can pull up the 1 minute chart so you can see it even better. Okay, let's see what happens, right? So market opens, stock tanks, right? And it was tanking already pre-market. I mean, it was gapping down huge pre-market. But the market opens at 9:30, gaps down, comes here to like about 520, right? Gaps up, and that's when I was talking about when I was referencing the short squeeze and to cover, you know, that you just reshort it. So look what happens. Gaps down, gaps up into resistance. So this is where you take big shorts into resistance. Gap down again, right? Gaps up into this 558, 560 level. You reshort it, because all this is that people who shorted pre-market and were holding their shares are covering. So that's all they're doing. It's just people taking some of those shares. Look what happens. The stock gaps up to this 558, 560 level, and you see it can't hold support. You just reshort it, risking off the level, and you can take a lot of fucking size, because at this point you don't see it, but the stock is going red on the day, and you know, and it's just, oh, I'm sorry, this is the wrong day. And this is what I'm talking about, focusing here. And you see how it just tanked all day. It just tanked all day, gapped up, and look what happened. It could not break that 549 level, because previous support now becomes resistance, and the stock is showing weakness. That's what I mean. So this is the day that you're looking at the key levels that were support on the first red day to potentially short into. That's all it is. That's why I knew. And the fucking thing collapsed today. I mean, it just tanked. You know, and then if you look, let's go back to that chart. And if you look what happened, right? The stock tanked, and I told everybody that I was gonna cover. I covered right before the close, and and so did other people. That's why you got this massive spike. But look what's happened. It's a lower high, showing you more weakness, showing you a lot more weakness. So today was the massive tank. Now let me go back 20 days, and look what happens, guys. The stock tanks, right? So what you want to see is, when you're looking at a tank, you know, you want to see what the overhead resistance is. Market opens, and look, this is where these are previous support levels are, right? Support now becomes resistance. So, and that's the only downside to this, is that it's not as technical as the regular charts. But if you look here, right, here's some support. Here's some support. Here's some, and then here's some more support, and this is a 30-minute time frame. I mean, you know, you can make it a shorter time frame, but the key is that you take a short and you watch the stock. You want to see it gap up, and you want to take a short into a key area of support. So here's another area of support. And if you look at it, look, the market opened and this thing just tanked. Now, if I did 20 days, 1 minute, it's not gonna work. Let's see if I could do 5 minutes. Turn it. Oh, look, see, this is why I like profit. I can't do this on the regular chart. But if you can see here, if you look at today, look what happens. The market opens and, you know, it couldn't hold this support level. You could have took a short risking off that level. And look, forms a lower high. That's showing you more weakness. And that's like guys like Steven Dux knows that. So what Steven Dux probably did was, you know, he saw that the weakness was happening. It had 2 red days, and he probably took a short into that previous resistance 550 level, and he just held it. He just probably takes like a 30, 40,000 share position, and he just holds it for like a couple of days, and then he gets 3, 4, 5 points, and that's why he makes $100,000, because he's risking off that 550 level, which is a clear heavy resistance level, and he just swings it over a couple of days. Now look what's interesting. When a stock has a massive sell-off, it's a great dip buy, and I talked about the dip buy just because sometimes that happens. Like a stock will have a clear support and then keep going. So let's say, you know, you short into a resistance level and it gaps back a little bit and then it keeps going up. So you cover, you know, but your risk is minimal because you're shorting right into a key resistance level. So it's fantastic risk reward. Look what happened here, guys. The stock literally touched what? 343. And look, you had some clear support down here at 3 in this 346, 343, 345 area. That's why, and it bounced off that. So, you know, stocks just don't bounce off any level. They're gonna bounce off a clear support level. And that's how it works. Let's look at a couple of other stocks. So for example, let's look at a Fuse. And here I should be able to use now a regular chart. My regular charting. Let me go here. Fuse, right? Fuse, FUSZ, I've been stalking this too, telling everybody that this was going to eventually collapse. There was no shares to short. Now, yesterday was the first red day, right? Today you had a continuation of that. When a stock goes from 10 cents to $2, it's going to have a massive pullback, all right? And these are dog shit companies. There's no reason why these stocks should be run. It's all pump, you know? So let me pull up the big chart, okay? So, all right, so yesterday was the first red day, right? So, you know, it closed red. So these are the clear support and resistance levels, right? Well, look what happens. The market opens 177, right? Yesterday, right, this thing found support at 177, 164. Well, look what happens when the market opens. Market opens, look what it touched. 179, couldn't hold it and tanked. You could have took a short risking off this, knowing that it's super overextended. It was its first red day was yesterday. So now you're shorting into a clear resistance level so that you can take a nice short, and look, the thing freaking tanked, you know? You can do this over and over and over and over and over again. EKSO, let's look at that. EKSO had, oh shit, it's not gonna, this is, okay, here we go. Yesterday was its first red day, right? And had a red day today too, okay? Yesterday, all right, here was some, if we look here, this was some clear support here at 192 and some clear support at 172, right? So 192, 172, and you know, you had some support here. I'll put a candle here at 175, and we'll say 181. Well, okay, so let's see what happens. This is the pre-market. It starts already breaking down pre-market. All right, market opens. Well, look what happens. It opens at 182, hit a high of 185, hit a low of 175, closed at 180. In that next candle, you got that pop, but it couldn't get above 175. Right there, you could take the short because it's major. You're shorting into resistance, all right? And you can take a short, you know, risking that 175 level or that 181 level because there's a lot of resistance and the stock is up. So you got to expect to take it back. And that's what a lot of short sellers do. They take a short and they swing this short and they just hold it all day pretty much. And look, this thing just gapped down. It had a little bounce, you know, but you know, and it's continuing to tank, and I bet you tomorrow it tanks some more. And that's my strategy. I look for I wait till it has its first red day. I don't short it that day. I mean, sometimes I do, it depends. You know, but I really focus on the day after the first red day, and I look to short into a key resistance level. So I'm hoping the stock pops so that I can short into a key resistance level. Tops, let's look at Tops. Okay, Tops had this crazy run, right? it finished red yesterday. I think it finished red yesterday. I'm gonna have to look at profit, because let's type it here, tops. Let's go 1 year, and it'll give me the candle. Yeah, so actually today is the first red day. Yeah, today is the 28th. Yeah, it finished red today. Okay, this is great. Tomorrow, you can paper trade this and see and try the strategy out for yourself and see if it works for you. All right. So what you would do is, right now, you also got to be able to find shares to short. So what you want to do is, let me pull up the big chart. You want to map out your key support and resistance levels, so that tomorrow you're going to take a short risking off one of those levels. So there's some support here at 203. There's some good support here at 210. All right, there's some good support here at 222. And there's also some good support. These are like the key support levels, I think. And there's some support here in this 226 level, and then 232. So these are the clear support levels. So what you want to do is, now you know this is a piece of shit, right? And tomorrow and eventually this is going to be the short of the century once it breaks 181. There's nothing holding this back down to like 10 cents. So I'm pretty sure short sellers are reserving their shares, thinking that tomorrow is going to finish red again. Plus the market is shitty. So this is what you want to do. You want to see tomorrow, what I would think is tomorrow is the stock's gonna open. It's gonna, I don't know where, it's probably gonna find support in one of these levels, $2, maybe 190. It'll spike up, and then it'll get rejected into one of these key levels for you to take a huge short in, risking shorting into resistance. And usually what you want to see is where's the most volume. So here there's a lot of volume in these candles. Like in this candle, here's 5-minute candle, 174,000 shares. Here's 58,000 shares. Here's 144,000 shares. So, in order for it to break above this, it's going to need the volume. Tomorrow, it's losing. I bet you it's probably starting to lose volume already. So, let me go to profit, because I'm not going to be able to do. So, yesterday, this thing had 12 million shares traded, and today had 6 million shares traded. So, it's already showing you weakness. First day, 9 million, 12 million, and today, 6 million. So it's already showing weakness. Tomorrow is probably the day that this shit is going to collapse. So what you want to do is short into resistance. And that's where you could take a massive short. And that's what they do. And a lot of these short sellers see that, and they just hold for a couple of days. That's what Steven Dux does. That's what Tim Grattani does. And you can do this with big price stocks too, like Facebook. I posted it today. I said today, I told you guys, let's see, let me go up to today. I said, when I posted my watch list this morning, I said, here's what I have on watch. The #1 watch should be Facebook. Lots of overhead resistance to take a short position, risking off. I think this keeps tanking, especially if it can hold 149, may hit 130. We'll see. Map those support and resistance lines, right? So let's talk about Facebook today. So let's pull up Facebook. Oops. We know Facebook finished red yesterday. And go. All right. So, here's Facebook, right? And I have I mapped a lot of key support and resistance levels, right? Yesterday finished red. Now let's do the 5-day, we'll do 5-day, 5-minute chart, right? So these levels here are let me extend them. So extend, yeah, it sucks. Like, I wish this was as user-friendly as the other one. So now, just to prove my strategy, right? Here, this is Facebook, right? Market opens 9:30. Here's 9:30. Starts gapping up, right? Now you can go long off these. If it breaks above a support level and holds, and you see a lot of volume, you can go long risking off that too. All right, especially because this is a stock that's been beaten down, so you gotta expect some push, but you gotta know your key resistance levels above, because you want to short into resistance. Now look what happens. Let me zoom. Let me extend this too. So here are all the levels, and I mapped these, right? These are all clear, right? Support and resistance levels that I'm basing the trade off. Well, look what happened here. This high here is 155.55. In this candle, look what happened here. This candle hit 155.56, And in that next candle, it opened at 155.54, hit a high of 155.88, hit a low of 154.70. And this is where it's showing weakness, and you could have took a short risking off this because this is a clear resistance level, and just take it back down. And you could have got how many points shorting this? 1 to 5 points shorting this. And look where it bounced off of, the clear support level. Look at that. And then it went back up, right? It came down, went back up, and look, it couldn't hold that 155 level. You could have took another short. Guys, that's all this is. So you look at the stock after it has its first red day, and really you could this is a higher price stock. I'm telling you, you could do this in high price stocks too. But this works great with low, you know, with penny stocks, with shitty penny stocks. Look, AKER. Let's look at this last one. Okay, AKER. Let me go charts. Okay, AKER. Look, it's been on a tear, right? It had its first red day yesterday, and it had another red day today, right? So what's the strategy, right? We're gonna short into resistance. So yesterday it hit a high of 98. It I'm sorry, 2 days ago it hit a high of 98, hit a low of 87, and it was holding that, right? Then yesterday was that first red day, right? So yesterday was that first red day. You know, the stock only got to a high of 93, okay? And you know, and then it hit a low of 87 and kind of consolidated and held. And it held this after hours too, right? Well, look what happens. Now, what you do is, all right, so this is before the market opens. So this is this morning, right? You're mapping before the market opens. You're mapping your support and resistance lines. You can see 87 is a clear support line. It's a clear support level. You know, you can put another trend line here. 90, was that 90? 89 and 92. I'm sorry, here it is. Yeah, 89, 92, it's right here. Let me zoom in some more so you can see it really good. Here's some clear support, low of 89, right? This is pre-market now, okay? Look what happens. Market opens, look what happens. The stock literally hits a high of 87, right? Touches, gets close to that 87 level and gets rejected. Pops, and right in here is where you take your short, where you see, all right, it gapped down, it got the spike, but it's not going up. It's not getting even back to that previous resistance, and you take a major shitload of shares shorting it, and look at this, the complete fucking tank, you know? And that's what you do. And that's why I call this the day after the first red day strategy. That's what you do. You wait, you look at those key levels on that first red day, you map out your support and resistance levels, and you wait for that spike at the open to short into. And that's all you do, guys. That's all it is. Like Guess. Let me pull up Guess. So this is a stock that I've been stalking for a while, and it hasn't, you know, this stock has been running from 1493 to 2295, 2215. Now this stock, if we look over the last year, right, every time this stock has a run, right, look what happens. It gaps up, right? Last time it has these gaps up, you know, it usually has a pullback. Gaps up, but it has a nice pullback. Gaps up, has a nice pullback. Gaps up, has a nice pullback. Hold on one second. Has a nice gap up, and look what happens. It gives it all back, right? And gap to fill below, gives it all back. Gaps up, gives it all back. Well, Guess is probably going to give it all back. Now let me clear this so you can see. Now, if we look at it, if we look at Guess, now this is not the best example, but 2 days ago was its first red day. Oh, yesterday was its first red day. And today it finished red, right? No volume, but just to prove a point, Yes, this was the day it finished red, right? So you want to put your map, your support and resistance lines, right? So here's some support at 2116. Here is some overhead resistance, right here, 2145. And you know, it's pretty choppy. It's hard to kind of figure where it is. But here, you want to look at the consolidation areas is where, you know, you really want to focus on. Here's some consolidation here, 2145, right? And we got some here. Here's another bounce right here, 2124. And here you go. Yeah, I'm making a video. So what happens, guys? Stock opens, right? So here you go. You get the pullback at the market open, right? Because you got this massive sell-off, right? That's what caused it to go red. Market opens, Stock gaps up, and look what happens. These are resistance points: 21.24, 21.16. Gaps up to what? High of 21.32, a low of 21.07, close at 21.10. That's where you know, yay, you know what? This is gonna keep giving it back. And sure enough, look, if you watch what the stock did all day, okay, it gapped all the way down. You could have took this short, and it found some support here at 20.64, gapped up, right? But look, it couldn't really hold that 21.16 and gave it back down. You could have reshorted it, right? That's the strategy. But it really works really, really well when on these shitty low flow, small cap companies, because you see that they always give back all their gains. Now, in theory, you could, if let's say you shorted risking off 21.24, you could swing this. You can hold this over a couple of days, because in my guess, tomorrow this thing tanks further, But so what I challenge you guys to do is look for stocks that have been, gapping up big time, that had their first red day today, all right? And then map your support resistance lines and see tomorrow what happens. All right, see what happens tomorrow. If it's a, you can take that short risking into a key resistance level. All right, guys. So I am probably not gonna make a watch list video today. Maybe I will. I'm not sure. I got some stuff to do, but I wanted to call that out. And that's the strategy, guys. Again, you want to look for stocks that have been gapping up huge, that had the first red day, closed red, and you want to map your support and resistance lines so that in the second day, so the day after, you're gonna short into a key resistance level where a stock can't hold resistance that was once support. You're gonna take you're gonna short into that, and that's what they do. That's what these guys do, guys. It's that simple. When a stock has a massive run like FUSZ or GERN, or tomorrow TPOS will be the perfect example, because this stock had a reverse split, it gapped up, and it's gonna give it all back. But see, map your key support and resistance levels, because today, damn, I hate when this happens, because today again was that first. Let me go in. Today was that first red day. All right, today was that first red day. So you're going to then, what did I do here? Oops, I'm wrong stock. Sorry. So today was that first red day. So see tomorrow, map your support and resistance levels, and then see if you can take a short into one of those resistance levels and see how the strategy works for you. All right, folks. So hope you found this helpful. Like, subscribe, and share, and let me know what you think. All right, have a good one.